Hey guys, welcome back. In today's video, we are talking about shorts buying AMC, the OBV accumulation, shorts declaring bankruptcy, and many more in this video. First, we're taking a look at this. Well, look who's quietly hedging long on AMC now. Doug Sifu and Virtu. Yes, Doug Sifu saw the tweet about brokerage platforms at risk from over-leveraged traders and hedge funds. Margin calls can leave the extra losses with brokerages. So if you take a look at this, Virtu Financial has bought a position in shares of AMC in the third quarter. So whether it's Virtu or specifically Doug Sifu that we've talked about before, he's someone who's obviously actively in terms of talking bad about AMC. He's mentioned how in the past he was a massive short seller of AMC and how he claims that they've covered all their positions, yet he's continuously talking about AMC. Now, one thing that we've known is obviously these short positions have never been covered, that these firms who took an over-leveraged short positions on AMC have not only not covered their shares, but continue to double down on these shares because they have to, because if they don't, then obviously the price of AMC will go up. And now what we're seeing is obviously with them buying into AMC, and again, we've seen this with Citadel in the past before and other firms like we did with Credit Suisse, like we did with UBS, is that they are obviously worried about what's to happen. So this goes on multiple perspectives that we have talked about in the past. The first is understanding that, again, all these articles that you see telling you why AMC is a bad firm, how AMC is a bad firm, telling you that you should be selling your AMC shares, telling you that you shouldn't get anywhere close towards AMC shares. We're getting the very same people who have shorted AMC to actually buy into AMC. So this is what we talked about in terms of understanding what is actually happening in the market. Yes, the articles are talking that you shouldn't buy AMC, but the institutions on the other hand, like we talked about with the institutional ownership going up, they are buying AMC. Even the short sellers of AMC are buying into AMC because they understand the threat. They understand the potential that's going to happen for AMC. And that's what we talked about with them hedging their positions. Remember, they aren't the first short seller to do this. They won't be the last to do this. And I wouldn't be surprised if they start increasing their positions in AMC. Now, we can also see from the OBV, even the OBV is following the same trend as 2020, just on a much larger scale and many more shares. More shares, bigger run, at least it should be. So like I said, we've seen with the institutional ownership. Now we're taking a look at the OBV, and it's what I said with how important it is to actually understand what is happening in the market rather than what the articles are trying to tell you. What you can see is that in the market, in terms of ownership, in terms of accumulation, in terms of OBV, we are all seeing it go up. This means that people are buying into AMC. What the media is trying to say is that AMC is a bad company, but when you take a deeper look at the fundamentals, you understand how AMC is improving. Now, I could go on and on, but we talked about this in the channel in the past before, so I'm sure that's something that everyone understands. But with the OBV, we're seeing an even bigger accumulation. We're seeing the same trend we saw in 2020. But now remember, it's a much larger scale, much bigger scale in the sense that, of course, there is a bigger float because of how many times they've created. There are now more synthetic shares created, and because more and more people are buying these synthetic shares, it creates the position where these shorts will have to actually cover more shares and continuously to create more synthetics. And obviously when the squeeze happen, because of what they've done, the squeeze price will get even higher, and that's where we are right now. Now let's talk about why shorts are worried as well, in terms of why they're hedging their positions. So recently we've covered this. Short sellers are now under federal investigations for collusion. And we've known this. We know how short sellers use their tactics. We know how short sellers use illegal and unethical tactics to obviously exploit the retail investors, to exploit the market for their own benefit. And now we're seeing this investigation. And what's important is seeing this. Why isn't this story all over financial and mainstream media? $126 million loss from naked short selling firm from a US firm based in Dubai. And this is what we see, where the firm seeks Chapter 15 bankruptcy in the US amid investigation into 126 million naked short trade losses. So this is what we talked about in terms of understanding how firms are obviously very worried about what's at stake here. We talked about how one of the biggest reasons why these firms are able to make money isn't because they are smarter than everyone else, isn't because they're ahead of everyone else, is that when they do take a position, they will manipulate it so it goes their way. And it isn't based on skill, it isn't based on actually what's happening, but rather how much they can manipulate it. And now the moment we see these investigations, and again, going into January, when we see the administration of Trump, when we see the office being unhappy with, naked short selling, we have people like Elon Musk, we have people like Trump who are obviously going to be very against it. We're now suddenly seeing all these short sellers who previously relied on these tactics are all starting to panic, and that's what they're worried about. And you can see the whole equity market is at risk. And when we do see this happening, obviously when we get more and more bans on naked short selling, you will see the real price discovery. And what I think is going to be a case in the future as we see more regulations on naked short selling and just short selling in general, is that more and more firms are going to be bankrupt. The reason for that is very simple, because they've all took up over leveraged positions. But the reason they're able to do that is because they can manipulate the market. But once they go into a market where they can no longer manipulate and they can't cover these over leveraged positions, then you can obviously imagine all the margin calls that's going to happen. And that's what they are, of course, worried about. Now, going ahead in terms of understanding what's happening, obviously with the brokers at risk, you can see Interactive Brokers caught in Hong Kong's $91 million trading freeze. And again, this is just kind of going back to what we talked about here in terms of the brokerage platforms at risk from over leveraged traders. Now, this is obviously reflecting that. And what's important, it's understanding what Interactive Brokers recently have obviously said. And this was the deleted post where he says, I think that equity prices are somewhat overextended. And I hope that as they come down, they will not come down too fast so we can liquidate as it happens and will not end up holding the bag from people who are unable to meet their margin calls. So we're seeing this thing happening right now. We're seeing how they talked about, brokerage platform at risk. We're seeing how they were caught in a trading freeze. And we're seeing how they're talking about equity prices as a whole is overextended, meaning that it's extremely inflated, meaning that he's possibly talking about a bubble. Now, depending on how he's obviously phrasing it, I do think that he's saying it's that bubble. And he's saying that when it comes crashing down, he's obviously hoping and that it doesn't come down too fast. And this is what we understand. These over leveraged positions are not how they make it out to be extremely healthy. That is not the case. The moment they can't handle the risk properly, and which they won't in various amount of stocks, they will be caught holding the bags. And that's when these margin calls will happen. That's when the liquidations will happen. And that's when the squeeze will happen. And so that's why they're worried. That's why not only brokers are worried, but shorts are worried as well. And it's why we're seeing everything, flying around right now. And it's why we're seeing all of a sudden all these new negative media on AMC because of everything that's, of course, happening. Now, going back to earlier of what we said, obviously with Trump in administration, and again, how Trump's obviously not happy with short sellers. If DJT squeezes, it could accelerate AMC and GME popping off. It's pretty clear Goldman Sachs and Citadel and other funds are shorting all three. Same spoof as always. So it's what we talked about. And again, I think it's just adding a new stock into the frame. Where in the past, we talked about how AMC and GME works and vice versa. Where if AMC were to squeeze, then GME will squeeze right after. Or if GME were to squeeze first, then AMC will squeeze right after. Because it's the same short sellers. And their liquidations will obviously be affected. They will get liquidated when one stock squeeze. But now it seemingly looks like DJT is obviously added towards the frame. Now, this is obviously a good thing in terms of understanding the fact that with DJT, there is more possibility of a regulation, because we obviously understand the link between DJT and Trump, and now Trump's going to office. And so if that were to be the case in terms of understanding that DJT, AMC, and GME will work in the same way, and we see how Trump will try and potentially fight for, of course, the kind of the fair market for DJT, then we could see the squeeze. And that would obviously allow AMC and GME to squeeze as well. And that's definitely something that we do want to see. Now, what we can also see is right now the bull case for GME stock. So something that we talked about is obviously understanding where GME is at. And again, we talked about recently, because of its abundance of cash, it's able to actually be profitable because of the interest. And I think that itself is a good thing. As long as a company is profitable, it can survive. And what we have to understand is obviously working its way for an actual proper operations. Some other thing, you can see how people are stacking up onto the GME calls right now. And I think that this is a very clear tale of understanding that we're going to be seeing more volume. The retail traders is definitely going to take over, and the institutions will be caught having to actually pay us. But yeah, guys, thanks for watching this video. I'll catch you guys next time.